Hey,
How you
Ryan.
doing, Lee?
Thanks for coming on. Doing well. I'm so glad you took the time to be here and share some of your practical wisdom with my audience. I want to give a real quick introduction of you, and then we can jump into our discussion. We have a lot of cool things to talk about. So, Ryan James is a president and CEO of Surety Bank. It's a community bank located just north of Orlando. Ryan and I have been friends and done work together for probably about 7 years now. And I've been able to watch Ryan grow and change as a person and a leader. And I've seen him make tough decisions behind the scenes to take care of his people, but at the same time, still crushing it for the bank. And they're doing very well. He is a very unconventional thinker, which is really a lot of the reason that I wanted to have him on, because I think that a lot of small business owners don't know that there are bankers out there that think unconventionally. He has a lot of out of the box ideas that he actually follows through on, which is pretty cool. And I've been able to see some of those from inception to fruition. I mean, let's face it, banking is boring, right? I mean, I think to the average person, but what's cool that I've seen Ryan do is he's been able to find a way to make it really interesting. And he's done that, I think, by being a forward thinking CEO and innovating inside of Surety. So he's been a joy to work with, and I'm super excited to have him here on Exploring Growth. So my audience can benefit from his practical wisdom. So thanks again, Ryan, for being here.
Lee, thanks for having me. I'm really looking forward to this. You do such a great job at what you do, and I've been able to see you grow at the same time, so I'm excited for this.
Yeah, thanks. Yeah, it's been fun. And we got some cool stuff coming on the horizon for Surety too. So to give our listeners a little bit of context to the ideas that you're going to share today, from where you're coming from, give us the short version of like, where did you come from in the banking world? Like, how did you get started, and what are you doing today with Surety?
So, yeah, I started out in banking out of college. And so I've been in banking now. This is my 21st year in banking. And I've been a bank CEO of Surety Bank since 2009. So a little over 10 years that I've been bank CEO. I didn't know that I wanted to get into banking. I started out wanting to be a stockbroker. And I realized early on during internship that just wasn't for me. So I ended up taking a job at a little bank, Surety Bank, in DeLand, Florida. And from there, what was pretty unique to that, to the other bankers is, Surety Bank had no training program. So it was hands-on learning from day one. You had a product, you had something you had to do, and you had to learn it. You had to figure out how to comply with regulations without anybody telling you how to do it. There was no roadmap. It was a small bank, so it didn't have a huge procedural manual. It didn't have any of those training programs. So looking back, to me, that really was such a benefit for me personally, because I learned best just getting thrown right into something. So, that's been my banking career, is just being kind of thrown right in the middle of, fires. When I became CEO in 2009, we were in the middle of the Great Recession. So, it was sink or swim. And so when you have no other choice, you just march forward. And so that's been a lot of my banking career. So, I've been told I don't really act like a banker. Well, I don't know what a banker should act like. So I just, act like myself and do what I feel is right.
Yeah. Yeah, I've seen that. I've seen you operate that way. And I can't imagine being a brand new bank CEO in 2006. I mean, you walk into the place thinking, oh, okay, take some time to kind of learn, I'm sorry.
2009, but yeah.
Oh, 2009. Oh, yeah. Okay. So even worse, even worse. Yeah, here you go. Yeah, exactly. Here you go. Here's a sinking ship. Figure it out.
Oh yeah, it was within months of being CEO. Just my capital was getting deteriorated from bad loans right off the bat.
Mm-hmm. Yeah, I mean, that was everybody that lived through that. That was an adult and working, experienced that pain. And I mean, to be on the banking side of that, you learned a lot in a short amount of time, I'm sure. Well, so one thing I wanted to talk about today is the fact that you guys offer so many different things to your customers, and you have a lot of unique customers, different than I've seen at other banks. But one of the major products that you've offered to small growing businesses is this mechanism of lending. I mean, it is a historic banking product. It's nothing really new, but which we can talk about some of that here pretty soon. But I wanted to talk about lending because it still is this mechanism or tool that businesses should be thinking about utilizing properly. So let's talk about lending for small business, right? I know you've seen the good, bad, and the ugly, and I'm sure you have lots of stories to tell, which I'd love to hear some of them. But you know, um, I think let's start with how should a small growing business be thinking about utilizing debt or leverage?
You know, the way I kind of look at it as small business is you don't want to take on debt when you're just starting out. You know, I feel that business
Mm-hmm.
needs to be profitable small before you ever think about taking on debt. The last thing you want to do is take on debt, the business doesn't work out,
Mm-hmm.
and you still have to pay that debt back. Because then the next business you
Mm-hmm.
start, you'll be carrying the load of the previous business. So you definitely want to
Mm-hmm.
make sure that your business is successful and is producing revenue and it has a good margin prior to even thinking about taking on debt institutionally. Now, some businesses, you may have that great idea and you know it's going to be winter. You're better off to go to your savings, to borrow from family members, and to grow organically from there. But before you really go on and take on debt from a lender, you want to establish and come
Mm-hmm.
from a place of strength that you have this product, whether it's a service, whether it's software, whether it's a physical product, whether you're mowing lawns and you're expanding to get that. You want to do it on a shoestring budget as much as possible.
Mm-hmm.
I can't stress that enough. When you have people say, "Oh, well, it would be successful, but I need money first." I've heard that a lot over the years, and
Mm-hmm.
majority of those aren't successful. If you think debt is going to make you successful,
Right. Right.
the business is not going to be successful. It has to be successful first, and then you leverage debt to really expand and to grow.
Definitely, and it kind of reminds me of this idea of proof of concept, where you want to go to your banker and say, look, the market has responded, and they really want what it is that I'm doing in whatever capacity, and now I just need some extra oomph behind me to do more of what we're already doing that's working. Would you say that's the way they should be thinking?
Correct. And then sometimes you will have where let's say you want to start a restaurant. Well, if you've never owned a restaurant, nobody's going to loan you money to start a restaurant. But if you've been a
Mm-hmm.
general manager of a
Mm-hmm.
restaurant and you've been in that career for years, then you've got a much better sense. The same way if you're um, a coder and you're producing and you're working for a company doing well and now you want to expand out and have your own group and you already have expertise not only in coding and project management, then you
Mm-hmm.
have that level set up. So sometimes even before starting your business, if you go and work for businesses to give you that expertise before you go out on your own, that too leads to
Mm-hmm.
your credibility, your character of being more successful
Mm-hmm.
later on. You really almost have to be a student before you can be a teacher.
Most definitely. And, I've seen that in my business too, where I'll end up getting ahead of myself because I'm not being patient enough for what I'm doing, learn the craft. Right. And so it sounds like what I hear you saying is people need to spend a little bit more time with their business and with their market, their customers, and take a little bit longer lead time before they take on this responsibility of more of an exponential growth.
Yeah, because when you go out on your own and you start that own business, you could be the best, doctor and work for a hospital. Now you want your own practice.
Mm-hmm.
Well, even though you may be the best surgeon in the world, you own your own practice. Now you have managing people. Now you have organization. Now you got to make sure you hire the right people that are filing with insurance. So you create a lot more jobs for yourself. And, some people may be really fantastic at one thing, but then now you're being asked to do a lot of other at the same time. So, you need to know that going into it. You need to be agile. You need to know that just because you're an expert in that one specific field, now you're going to have 10 other hats you're going to have to wear. And, that is a shock to a lot of people that end up going on their own.
Yeah. Yeah, you're right. You've lent money to businesses, all kinds of businesses over the years. What are some that come to mind when you think about, types of businesses that have really done well in utilizing debt for growth? And how did they deploy that money?
So too, and I kind of notice ones that when they come in and on commercial, you typically have more down payment on real estate than you do residential. And that's a shock to people where they're used to, well, I bought a house with 5% down. Now I want to buy this commercial building and you're wanting 20%, 30% down. And they think of that as a negative. But the more money you have down, if that commercial property is necessary in your line of business, it insulates you in the future. So if there are hiccups, then you have built-in equity. Then you have room if there's a massive recession, the economy goes down, and okay, now maybe your terms could be extended a little. It gives you some room and breathing room. You don't want to go in there and think of, what's the littlest I can go in and go down? Like, it's okay to put more down on that commercial property. I want success of you, not to just, always look at leveraging. You do need to build in some cushions in regards to economy because, not everything is 100% in your control.
Right. Yeah, I know you got some juicy stories of some businesses you've lent money to over the years. And I know you can't say names and business names, but I know everyone would love to hear a good story about either how something was, that was utilized in a great way and you saw them grow, because I think that's really rewarding for what you do, or, maybe where someone didn't do what they should have done with the money.
So, primarily we're commercial lenders, so I can speak to like that, and majority of our loans over the years have been commercial loans tied to commercial real estate or real estate for the commercial purpose. But one thing I learned really quick, and I've been a lender for many years and underwriting loans. Prior to 2009, it seemed very easy. Banks were, if I didn't loan this money, the other bank was going to loan. So a lot of banks were they were going past they were doing a lot of exceptions because they're like, well, I have to be in this business. I have to lend.
Yeah. Yeah.
And so that, as a banker, you cannot do. You can't, you can't base your judgment based on what your competition is doing. You have to stick to what number one. So what I saw in 2009 when the Great Recession hit and property values decreased, it was now socially acceptable to be foreclosed on or, to short sale. It was socially acceptable. And so people would hear from their neighbors, oh, I got out of this much debt and this. And, commercial loans, and, banks aren't owned by the government. Surety Bank, we're a business just like any other business. We have shareholders and, businesses think, oh, well, the bank's insured. Well, yes, the deposits are insured, and that insurance comes into play after all the owners of bank have, exhausted all of our equity. So, before it ever even would get to that, all the owners would have lose all their equity in a bank for FDIC insurance to ever come into play. So during that time when people were saying, I can't make my payment, in businesses, what I would do is, since I was young, 30 years old, I would just show up plain clothes and go, if it's a retail establishment, go there and lay my eyes on it and see. And a lot of times you can judge, you can see, yeah, they had a little down in the
Mm-hmm.
economy, but they were playing it up. So they were doing the opposite than they were years before. They're saying, oh, I'm doing so well. Now
Yeah.
they were saying I'm not doing very well. And I remember one specifically, it was a gas station, and I was in there, and the guy was saying how good he was. There was a huge apartment development right behind him. So there was a lot of traffic in there, and that was a cash business. So
Mm-hmm.
he could, may not report everything on his taxes. And
Mm-hmm.
so he's telling the bank, I can't make a payment. I can't afford this. But when I went in there just talking to him, he didn't know me from Adam. He was telling me how great business was doing. And he just called my
Yeah.
office and was saying he was going to throw his keys at us. And so hearing that, I handed him my card. You could see it in his
Yeah.
face. Oh, shit. I go, that's right. And so from then on, it was like, so we took the hands-on approach, and the people were
Yeah.
impacted greatly in 2009. Everyone was. He was impacted,
Yeah.
but he wasn't impacted to the scale where, I forget what he owed us. Let's say $500,000. What he wanted us to do was just say, forgive $200,000. Well, that's us taking money
Mm-hmm.
from our pocket.
Mm-hmm.
So no, we worked
Right.
with him. We did lower the rate because he was impacted, but we had to get to that honesty level, because really he was bluffing. He didn't want to get foreclosed on. That's how he feeds. So we took the hands-on approach. I would go out, visit him. It's a retail establishment. I would sit out there, watch the traffic, see you have a good gauge, and work with them.
Mm-hmm.
Okay, at that time they couldn't afford a 7%. Well, could they afford 4%? Okay, were they interest only?
Right. Right.
So, just hands-on approach. But really, during that time, it really turned socially acceptable to be foreclosed on, and that was detrimental to everybody as a whole. So people didn't realize how that
Yeah.
trickled down and affect property values throughout the whole nation.
Right. Yeah. And that makes me think of, I think it makes me think of fraud, right? We've talked about fraud a lot. And in fact, it's probably a good time to plug your new podcast that's about to launch called Paper, where you talk about fraud and you talk about cryptocurrency and NFTs and uh, Bitcoin exchanges and all kinds of fun new future money type of things, DeFi related things. And I'll link that in wherever this is posted. I'll link that there. A lot of really cool conversations that are happening there. But this makes me think of some of our fraud conversations, where uh, you basically have a whole team. I would say have a whole floor at Surety that is dedicated to fighting fraud for money service businesses. Um, I mean, I would be interested to get some of your thoughts on fraud as in context to small growing businesses. Because I think a lot of the businesses are B2B, but a lot of them are B2C, and they have a lot of fraud both ways.
That is true, and that is what you see in the media all day long is consumers being defrauded, and that of course happens, and there has to be consumer awareness, and there should be a lot of these consumer
Mm-hmm.
protection laws that help, but really it's a two-way street, just in that effect. That person, they were trying to defraud us, and
Mm-hmm.
consumers are creating too a whole lot of fraud in the industry that is created. So
Mm-hmm.
all of that fraud is kind of built into the pricing. In regards to when you're a small business owner, depending on what you sell, you're going to accept payments in many different areas. My brother-in-law, he builds and manufactures enclosed and trailers, whether to store, if somebody wants to store their motorcycles, their lawn equipment, that kind of stuff. So these are
Mm-hmm.
high ticket items. They run from a few thousand to tens of thousands, custom made. And he of course is
Mm-hmm.
going to accept check, cash, money orders, get paid as it goes. But there was a year where he took a credit card transaction. That person was there, ID, everything. It was nearly $10,000, and then later chargeback, and he had to fight that and lost that 10,000. So he did everything on his end. So that is a huge cost to that small business. Luckily, they were able to get that trailer back and have that chargeback, but now
Yeah.
he can't sell that trailer for $10,000. It's now used
Right.
and impactful.
Right.
But if he wasn't in a good position and strength, that one thing could be a domino effect and cause cash flow problems. And businesses a lot of times don't go under because they're not profitable. They go under because of cash flow. They have to buy the raw
Right.
materials. They have to pay their employees before they're getting paid. So there's a lot of upfront cost goes until they get paid. So, and that's where there could be a lot of benefits to accepting cryptocurrency as opposed to a credit card for larger ticket items, because you don't have that chargeback risk.
Right.
It's putting that ownership then on the consumer vetting the business. So it's kind of a swap. So there's applications to that. So really, yes, the paper podcast, we'll dive into different areas of to what is true. You have fraud on both sides, and what protections are there?
Yeah, and I want to touch on the cryptocurrency side of it, but for business owners who are not really in tune with Bitcoin and the blockchain and all the different DeFi things that are coming that are going to be beneficial to a large degree for them, in terms of fraud, how can they, what should they be thinking about how to limit the amount of fraud that comes through their business and in their dealings? I mean, I think that story about your brother-in-law is a great example.
Well, I mean, little things too. If you're accepting credit cards, understand your rights and what the risk is. Whether it's early on, everybody should obviously have that chip reader, but there's different levels of degree. If you're accepting online payments, then as a merchant, there's a level of degree of fraud that you may be accepting. Whether it's a presentment or whether it's over by the phone and you're getting the CVV on the card. So you do kind of need to know those things, because it's not if you're going to get hit, it's when. Because in this day and age,
Right.
the consumer could have received your goods. Maybe they were just unhappy with it. They have buyer's remorse, and they go on their app and dispute the charge of their credit card, and now that's affecting your livelihood.
Right. Right.
So be proactive, be upfront. If somebody has an issue with your product, know those things. Maybe it is easier to say, send me the product back, we'll refund your money, as opposed to them then doing a chargeback and affecting your percentages and ratios later down the road.
Yeah. So it's thinking through on the front end, then, how are people going to receive my product or service, and how are they going to use it, and what could be going through their mind during that time. I've seen on Amazon, it comes to mind, you see the product descriptions are changing now, where they're much more involved around how they're explaining what your experience is going to be, so that it's fair. They're setting your expectation for when you receive this product. We don't want you to send it back, is essentially, when you read through the lines, that's what they're saying. And so, maybe for businesses, it's about whether it's a product or a service. It's about thinking about that interaction and the experience that they're going to have. Because, as a marketer, I know, we've talked a lot about this. Is a lot of it is about experience these days, and that's what people are spending their money on. And I think that even goes to when they buy products or when they buy a service from a traditional type of business, like a lawn company. I mean, I think that people want to have a certain experience, and they have an expectation in their mind. And if that's not satisfied, then they just charge it back, or they just say, I'm going to take it back to Target or Walmart or Amazon or wherever. And I think they're sort of starting to apply that thinking across the board, which can damage businesses in their cash flow, because now they have all these chargebacks and they have product that they either don't have on their shelves now, or do have and can't sell. So I think that's good advice.
Two, when you start out and if you're a one person shop, you can be profitable in smaller margins. But then you have to
Mm-hmm.
realize, okay, now I want to expand and I'm moving from my house to a facility and I have other employees. As your business grows,
Mm-hmm.
you have to have more margin in your product to make as much money
Mm-hmm.
because now you're adding on a lot of additional costs, more taxes, more payroll taxes, and it just keeps adding on. And I remember I heard listening a very successful business owner, and he said every time my business tripled, I had to learn a whole new set. So whether he went from one employee to three employee was completely different, 9, 27. And so, and I can see that too, because where we're at now at about, I believe, 36 employees. Okay, if we're to triple, then I'm going to have more different titles of bank employees. So now I've got additional other costs. We're going to have more, maybe someone specific now to HR, maybe someone specific to this, to where, outsourcing portions of it through a payroll provider is fine now at this size. So a lot of times as you grow, if you're not getting lesser in your cost of building your product, or getting that, your other expenses are going to expand. And so sometimes growth is not always the best because there are a lot of additional expenses you're adding.
Yeah, and I see that too, and I think that's really the biggest struggle that I see CEOs having from my vantage point, going from a smaller company to maybe a mid-sized company, is not being able to change their thinking about how they're taking their business to market, and that's across the board. As you're saying, from 3 employees to 27 employees, your company looks different. You have different titles, different roles that have different policies, different trainings. You have to start putting systems in place. Your business becomes, it's a growing organism. It becomes something new. It's like an infant is ultimately going to become a teenager, and those are two different stresses for a parent, right? But you have to be able to adapt and change with that growing organism, so you can serve it well and have it serve your customers well. So yeah, I think that's great. Let's talk about cryptocurrency, because I think you have an interesting perspective on banks and how they um, what their relationship is with crypto. Um, how how do you see banks adapting to the use of Bitcoin, or other cryptocurrencies as money changes in the
Yeah,
future?
when I am out and I'm talking to other bankers, the majority consistency is, well, I just don't understand it. I just this. And, you don't have to necessarily understand it 100% as a banker, but you got to understand it's there. It's real. Even though you may not have a customer that's an exchange, you're going to have consumers that are going to be purchasing it. So, it is going to hit their bank whether they like it or not. It's either going to be drafted out and go to a Coinbase exchange. They may see deposits coming in through Kraken, and they need to be aware, of course, that this does exist. It is mainstream, and it's going to happen throughout their institution. So, banks have a level of monitoring that we have to do. So, Surety Bank, we know that we have compliance. We're in a highly regulated industry. So my approach is I take compliance. To me, compliance is a profit center. You have to do it, so you better be as good and as efficient at it. And so that's where I have really set mindset and culture as compliance. Yes, we have to do it. We're going to be better than everyone else. You don't have to have a large size. You don't have to be a $3 trillion bank to have good compliance.
Right,
You just have to know what is
right.
going on in your business, who they are, and ultimately follow the transactions and follow the money and make sure people aren't up to nefarious activities. So, that's what you have to do. So, we lean into compliance and we are experts in anti money laundering.
Do you? What's your take on like the landscape of banks, and let's just talk about community banks, the smaller banks, not the big banks, because I think most business owners would agree that having a smaller bank is a good thing, because there's a personal connection there. They know your business, they know you, that kind of thing. Um, do you see, when you look at community banks and this adoption or non-adoption of crypto and the related sort of DeFi conversation, do you see them, certain banks, that they're going to sort of be weeded out over time because they're not paying attention to it? Or how do you think it's going to change how banks, approach lending and
I think that's
deposits
going
and
to be the
everything?
same banks that would be weeded out regardless of crypto just because of change, because they're not evolving and adapting
Mhm.
with their,
Mhm.
they are stuck in their ways and they don't want to change. We've always done it this way and they're not changing. So whether it's crypto or anything, they're not going to adapt regardless. So I think they would get weeded out from something else. And inherently, bankers don't like crypto because there is no centralization. Banks process everything through centralization. But also, in theory, like individuals are not going to completely go away and be 100. Not everybody's going to go into 100% decentralization either. There's a risk to that too. So, there is a way that banks can maintain, their aspect of centralization, be responsible. It is still, you have your money in a bank, you do have insurance. Okay. Mm-hmm. You don't in cryptocurrencies. You don't. Right. So you've got that aspect. So, banks aren't going away. You can transfer. And I can see, there's definitely going to be a lot more regulations as it comes with cryptocurrencies, and, whether the SEC wants to get on it, stored value, isn't it a stock they're selling? So much of the transactions is state by state. So it really needs to be a little bit more centralized for them, so they're not having to comply with each individual state. So I see some standard across the board. And yes, I can see where banks can play a major part into possibly even hosting wallets and having it secured. And, why can't we level up later on and even have insurance on products later on? Why isn't that possible? So I think there's a lot of technology and it all, interconnects, because, crypto's not, there's a ton of transparency in crypto. It's not completely anonymous. There are those things. And ultimately, when crypto, and especially in larger amounts, once it's touching the financial banking system, the banks have to know that money generated was from legal means. I mean, it's always the way. When we open up accounts, we have to have a reasonable belief of who that individual, who that business is, and whether or not this money is from ill-gotten gains. I mean, we have to. Mm-hmm. And that's fine. I don't think anybody can really dispute that. I think individual was, if Lee wants to, majority of people and consumers, they just don't like the prying eye of the government. So they like that aspect. And I can understand that. Let's get out of my business. If I want to buy X, that's my business. Leave me alone. And I get that. But overall, I think everybody can have a consensus of, you don't want human trafficking. You don't want terrorist activities. You don't want large scale money laundering operations and cartels. Like, I think we can all agree we don't really want that, and we need to do our best to keep that out of our financial systems.
Yeah. So it sounds like to me, banking, if it innovates and really thinks about the consumer, it can stay relevant long term. I think in the short term, I agree, like banking is still very relevant, but in the long term, I think it can stay relevant by being part of the mechanism that truly supports the consumer through compliance, fraud, and possibly transactions as well, continuing on. But I think it's going to take bankers to rethink their business model to a large degree, as time goes on. Otherwise, I mean, just like any other business, they're, you know, cu- customers are going to go where they want to go and what suits them. So they have to have a value in the market. What's that
And
value?
it's going to need to
And
advancements in the federal government and this centralization as well.
Mhm.
So, they've got to do some upgrading.
Yeah. So that I have another question about that. I think more of a broader question, I guess, is that how should small businesses be thinking about their relationship with a bank these days as we're talking about this bigger picture of all these different things that are coming and happening with banks, and with the economy. Um, how should they think about a healthy relationship with a bank, and what can a bank do for them?
Yeah, that's a really good question. And you got to think of where you want to go from there.
Mm-hmm.
There's a lot of options. You can open up accounts very clearly. Does it make a difference if they're in your neighborhood or online? What is important to
Mm-hmm.
you? To me, ultimately,
Mm-hmm.
what is important is, you know, banks generally sell the same product. I'm not kidding anyone. They're all
Mm-hmm.
the same bank accounts. They all go through the same system at the end of the
In terms of
day.
function, yes. In terms of
Correct.
function,
That
yes, yeah.
is. So, banks themselves, they may have a different differentiator on their marketing on the front end, but, we're all selling pretty much the same thing. But I can tell you in 2009, when the shit hit the fan and that business was broke on, the federal government, when they came and examined us, they wanted us to foreclose on everybody that was defaulting. So they made it very difficult. If we had a loan at 7%, they could afford that, but they could afford 5%. Gave it was more incentives for us to foreclose than it was to work it out. Because when you worked out that loan, it went on our books as a troubled debt, and more troubled debts increased our insurance and increased our costs. So, but in spirit, that's not a good thing. Even though if that property did have enough equity where we were going to remain whole from foreclosure, we weren't going to foreclose on that person if they could afford that. It's
Right.
just plain insensitive. But when you do go with a large bank and they paint with a broad stroke, that's what you're going to get. Wells Fargo eliminating lines of credits and businesses, over the past year. So I heard people that, in the practice. So, you need to know who you're dealing with up front. So we don't do that. We're not going to paint a wide brush and say, you know what, I'm going to eliminate all of my lines of credits, because we individually looked at those lines of credits and we based those lines of credits not on whether they deserved it, but whether they had a need to utilize it. We're just not selling products to add to our quota.
Right.
My staff, we're not doing that. They're not going to hit a quota for selling 6 accounts to one individual.
Right.
We don't do that. We're never going to do that. And so when there is an issue, whether we made a mistake or whether some inadvertently happened to come, you're going to be able to talk to somebody very quickly, hands down. So
Right.
maybe, on the front end, is it going to cost more? Is it going to more time? Maybe, because, we have to make a certain percentage so we can maintain that level of service, because we're going to be there for you with good times.
Right. It's just
and
like
the bad
anything else in
times.
the market.
We're not going to run away from you during the bad times.
Right. Exactly. It's just like any other product in the market. If there's a premium on it, and again, it's a slight premium, to the quality, right? I mean, if the quality's not there, was it really worth that extra half a point you got off on that loan? I mean, I've dealt with big banks, from a customer service standpoint, just as a consumer in the past, and um, it's like dealing with the government. That's the best analogy I can give, because if it doesn't fit in their box, it's just you're completely shut down. There's absolutely, the branch manager, the regional manager, the whoever, they'll straight up tell you, I cannot do anything about it, and I won't. My boss cannot do anything about it, and they won't, and so on and so forth. This is a policy for this reason, and we just will not do anything. And to me, I find that just like that's just crazy how they're able to
If that
operate a business
half a
like that.
point difference on that loan is going to make the difference in your business, you shouldn't be in business, And
Yeah.
if that's the
Yeah.
biggest thing
Right.
for you is that rate having, now obviously if there's a huge rate spread, that's a different story. But if that half a point is going to make a
Right.
difference in your loan on that rate,
Mhm.
for you to go to one of the top four largest banks or community bank,
Mhm.
you don't believe
Mhm.
in relationships, because
Yeah.
at the end of the day, in 2 years, 3 years, if you wanted to modify that loan, they're not going to do that.
Mhm.
And modifications, let's say you have three pieces of collateral and you're going to sell a piece of collateral
Mhm.
and substitute it
Mhm.
for another. That big bank is not going to know how to do that. They're going to say, pay us off and
Right.
we'll redo it. And then you've got a whole nother level of costs. So where we're going to look at that, we can modify
Yes.
that, charge appropriately just for that. And then that saved you so much time. It saved you doc stamps and tangible taxes. And it's
Yeah.
just,
Yeah. Yeah.
and I tell you, people that have dealt with, that have had many commercial closings and have dealt with my staff, and they have dealt with a large institution, they'll tell you, oh my goodness, you guys are smooth, you're on top of it, you looked out for our interests. We reviewed that appraisal actually and looked at it and
Mhm.
said, this doesn't make sense, and had that conversation with our customer. And we actually look at the surveys. We go through those steps and follow the closing and are there. We have an employee at that
Right.
closing. You're not going to get that at another bank. And so if that half a point is important to you, we're just not the right fit.
So I got one last question for you before we sort of wrap this up, and that is, if you could change a small growing business owner, CEO's mind about anything, and it doesn't have to be lending, it could, or financial, it could be anything that you've seen. What would
So,
that be?
don't have an ego, and just know, because it works today, it may not work tomorrow, and it's okay to go back and scrap it and start over.
Mm-hmm.
And I think in the life of any business, you have to do that, no matter what it is, whether it's hiring procedures, whether it's um, how you're verifying your
Yeah.
cash flow, every part of your business, always take a step back and think, do I need to change this? Do I need to scrap it and start over? And it's okay to do that. And watch out for the big thing, a loss aversion. Just because you've had X amount of money into it doesn't mean you should keep throwing more money after it. Don't
Yeah.
throw good money after bad. And that's really
Yes.
hard, because if you have $10,000 into something, you're like, oh, another $1,000 of work, and
Yeah.
sometimes it's better just
Yeah.
scrap it all together and start over. And that's very difficult once you have money into it. And I've seen that with people, is they almost make decisions of how much money they already have into it as opposed to
Mm-hmm.
what they could going forward. So, pay attention to that. People are more afraid of losing what they have. So watch out for that loss
Right.
aversion principle.
Right.
And, it's okay to start over.
Thanks for being on here again, and all the practical wisdom the banker can give, because I can't think of another banker that would be able to relate with a small business owner as much as you can. Um, as we kind of wrap this up, do you have any resources that you could recommend? Books, podcasts, whatever it may be that you've come across that you've found value in, that you think it would be
Yeah, one of my
beneficial to
favorites
a
is
business
Rework.
owner?
I love that.
Okay.
It's got practical, quick little
Okay.
knowledge. The creators of Basecamp, on there, how they created an app that worked and had small functions. And even though they had all this input of, hey, can your app do this and this, they realized that, like, I can't do a million things crappy. I just need to do a few things right.
Yeah.
And I think that was
Yeah.
pretty awesome. And then a lot of times in banking, I've gotten better ideas outside of my industry. Of course, like I've never really had a unique idea at a banking convention, but I've gotten better ideas in other industries and how it can carry over. In bank, I've got more information from Wired magazine. So you can find inspiration in business practicality. Always podcasts are great to listen to. I like Tim Ferriss on how he digs into different things. He's got a wonderful business mind. I mean, even if you listen to Joe Rogan and the experts he puts on there, they don't have to be an expert in business. They could be a expert in martial arts and how they take care of that and how it can carry forward into your life. And so whatever you're interested in, I think you can carry it toward your business, because banking is boring. So I've had to make it more exciting for me to keep my attention.
Yeah. Banking's boring, but the business of banking is very
because it
interesting.
Touches everybody, every business, and commercial.
That's right.
Consumers, and so it can be very exciting, and it's really neat when we're in a small town, so a lot of loans on lending on downtown, you're seeing flourish, that those businesses wouldn't be there if we didn't lend them the money years ago, and now they're successful. So that's really cool to see.
That's great. Well, thanks again. So if people want to find you, they can go to ryangjames.com. They can find the paper podcast there, which is really exciting that you're launching that pretty soon. You can hear lots of Ryan's ideas, much more in depth there. It's just really exciting. Thanks again, Ryan. And I hope to have you back here once things get going. Hey, I really appreciate you tuning into this episode of Exploring Growth. I'm trying to get this in the hands of as many growing businesses as possible so they can take this practical wisdom and deploy it in their companies or with their teams. If you're getting some value out of this show and know someone who should listen as well, would you consider sharing it with them or leave a positive review on the platform in which you're listening or watching? YouTube audience, leave a comment below with something you liked or your perspective on what we discussed. I'm grateful for everyone that tunes in every week. Let's keep exploring.